The Fed has left interest rates at 0%, signaling the central bank's unwillingness to allow the market to restore order. Stocks, big businesses, and the wallets of the elite all rely on extremely low interest rates to continue their schemes. The question is, will the Fed turn interest rates negative? You came here for the truth, so let me unveil that for you. Let's get into this today. What I've been covering recently is the Fed. Are they going to increase interest rates, or are they going to kick the can down the road? Where we found out, of course, that they decided to have these interest rates remain at 0%. But I have to ask that question, where do they go from here? So let's look at the result of their actions. And the stocks fell, in fact, sharply, but the bond prices rose as traders reacted to the new level of worry about China after the Fed revealed its own concerns. The stocks were actually down sharply, and that left the Dow Jones down as much as 300 points. Now look at this quote at the bottom. The biggest signal from the Fed is that the international conditions are weak enough that we should be concerned about a bleed through to domestic conditions, and that's what's worrying the market more than anything else. This is a blame game that goes on. It's always he said, she said. It's always trying to say we are a strong economy, but it's them over there. They're the ones that are ruining everything. But this isn't how it works at all. Stocks do not go up because people are concerned. Stocks go up or down because of computer algorithms. They base it off of who knows what sort of information they put into that, but you know that it isn't reality. That's what we see here with the high frequency trading that affects things like we saw on Friday. Federal Reserve Chair Janet Yellen has built the case for higher interest rates this year on the foundation of rapid hiring by corporate America driving the U.S. to full employment. How incredible this is when we have full employment, according to the Federal Reserve, at the same time that we have decades low employment levels. I've shown you that nearly 40-year lows on the employment levels, yet if you're using the unemployment, the U3 or even the U6, it shows a completely different number. So right here in the highlighted portion, whereas the Fed pronouncements this year have made glancing references to overseas factors, Thursday's statement ratcheted up the rhetoric markedly with an explicit reference to global economic and financial developments and these damage they could do to growth and inflation. Now, obviously, the U.S. is concerned because they're supposed to be the engine of growth for the whole world, buying and consuming everything that comes across its path. But that is not going well at the moment. So they pointed their finger at the global economic and financial developments. They're saying China's weak. And we can't grow if China's weak. It's their fault. That's what happened here. And this is what the Federal Reserve used as an excuse not to increase the interest rates. So another month of this. This is actually interesting to note, and it really segues what we're talking about. Chinese have been snapping up U.S. real estate of all kinds, looking for a safer place to put their money than their own slowing economy. Investors from China are now second to only the Canadians in the number of U.S. homes they buy. So the highlighted portion says, in the last few months, amid signs that the China economy is slowing more than expected, Chinese investors have stepped up their buying even more. The government's decision last month to downgrade the country's currency added to their urgency, since the weaker yuan makes buying real estate in dollars more expensive. Whenever a country is suffering with their currency, they're going to do a few things. Number one, they're going to pull it out of the bank and they want to buy something. The question is, do they buy locally or do they buy internationally? And that's what China is having this bout with at the moment. You have a lot of money leaving China. Now, they may not necessarily be upset about that because of what has happened here. We can see a lot of yuan leaving and purchasing up US dollars instead. So this is what has been occurring at an increasing rate over the past few years. It isn't necessarily just big investment companies or corporations. It's just individuals doing that, and they can diversify out of China, out of the yuan, simply by buying US real estate, oftentimes sitting empty. But there are other reasons for this. Let's move on to this as we look at the Chinese stocks. What they said was that this was actually a good thing that the stock market burst, because it would have been too late if it did so later. So no matter how high it went, how extremely high, as long as they can use this as a propaganda, then they, of course, burst at the right time. That wasn't the case. It never is. Stocks always go too hot too fast, and then they will crash down. That's what happens. That's what happened here. And then we have to talk about the obvious issue of this video. Bank of England could set negative interest rate. Move would mean that rather than earning money, savers would be charged for keeping their cash in the bank. This is out of the Daily Mail. I saw it in the Telegraph as well. Chief economist speaks out, citing ultra-low inflation and minimal growth. U.S. policymakers have decided not to raise rates, thanks, of course, and this is a global mainstream media that we have the same propaganda, thanks to China turmoil. They're also using that. He also suggested raising the inflation target from 2% to 4%. So he's saying bring the interest rates down even further into the negative level, and then allow inflation to be increased. And how do you do that? You print money. So low interest rates, money printing. What else would a central banker say? This is pretty incredible. He's not the first one to suggest it. And of course, England wouldn't be the first ones to have a negative interest rate. In my book, I talked about the value of money declining over time. In fact, that's one of the themes of the Money GPS as a whole. And I don't mean just my book, I'm talking about my whole empire, let's call it, of information that I'm trying to bring out with the free e-course, with the free YouTube videos. In 1970, the average home price was about $27,000. If you can believe it, in 2010, it was about $270,000. That's a tenfold increase in 40 years. Now think about that versus the income that we are earning. The median household income for 1970 was $9,000. 40 years later, it's $50,000. That's a five-fold increase over that same period. So the houses, as an example, the houses increasing tenfold, where you have the income only increasing fivefold. So if you look at it that way, things have really become harder for the individual trying to afford everything that they were and in 4 decades ago. So this is obviously a very big problem for purchasing things like houses, like cars, all the big ticket items, but even things like food begin to add up. These are expenses which simply put a big damper onto the economy as a whole. That's what I was trying to mention in my book, and it's obviously connected into what we are talking about today. A recovery for the rich, something that I bring up often, constantly showing you new information that proves this. Only the richest have seen their incomes climb from 2006, the last full year before the recession. You could see the household income. If you're rich, it's doing well. If you're in the lower percentile, well, then you're not doing so well. The middle class is hurting now, and this is taking its toll. Look at this. Angry backlash at official with a 1.3 million home who insisted elderly should downsize. So this official here is saying, you know what? You are basically in a situation, you're elderly, you should downsize your home. You should get and do what the prince said, I believe it was Prince Philip, possibly Prince Charles, I'm not sure, said you should snub the tub. That's right. You should not take baths and you should not take warm showers because you're using too much energy. Meanwhile, they have palaces. They have one individual from the so-called monarchy has hundreds of people working for them, just the one person. What a waste this is. And you always have the rich, you always have the elite telling the middle class what to do. It constantly happens, and this is the way it works because they are in control. Even this official, who's simply just a minion of the system, has so much more power than the average individual in what they can do and the information that they receive. If you found this video informative, please give me a thumbs up. Trying to get back to all your comments. I replied to a whole bunch yesterday. I have so many emails. Stay tuned. I will reply to your emails. I have a few weeks at least worth in there, but I am slowly getting back to them. So that's it for this video. If you found it informative, I know you'll find my book, The Money GPS, even more informative. You can actually look through the pages of the book. If you go over to Amazon, they have this look inside feature, which allows you to flip through the book and see if you like it. Take care.